February 23rd, the market update desk with Scott Riley, NMLS 157524. We had an awesome weekend. We had dual gold in hockey, U.S. men's and women's. Really cool to see the emotional aspect of both teams. Specifically, if you didn't follow for men's hockey, there was a player that would have been on the team who passed away from getting hit on a bike in Canada a year ago. So, very moving. They brought his kids out, his infant kids out on the ice to celebrate the win with them. So, very cool when we come together. Maybe we should all take note. So let's go over what's happening today, what we're looking for the week. There was an interview Fed Governor Waller did recently and gave his thoughts on the latest jobs report and the upcoming Fed meeting in March. Gosh, that's only a few weeks away. He's a very, very analytical individual and shares a lot of the same reasoning that we've talked about on these episodes. He was a dissenter at the last meeting, wanting a 25 basis point or quarter point cut. He feels that the January jobs report was inaccurate and will be revised lower. He did point to the revisions through 2025 that have been significant, only showing 15,000 net jobs created per month, and also explained about those revisions through the QCEW. We've talked about all this, that it generally always gets revised lower, many times very significant drops in net jobs created. He does think it's highly unlikely that in January we saw more job gains than the previous 9 months combined. And he thinks the January job gains will be revised lower, just like we saw in 2025. Also highlighted the negative 13,000 data point that Revelio showed in jobs, and only 22,000 jobs gained from ADP. The huge cut in the Challenger jobs cut reports and the cut in the JOLTS report, all things we've been talking about. And that's why that most recent jobs report we saw a week ago doesn't hold water in most people's estimate. Now, many Fed members are obsessed with inflation being too high. Waller thinks that the underlying inflation is actually closer to 2% when you remove tariffs and they lag in shelter costs, specifically housing. Thinks that the decline in inflation alone, even if labor rebounds, may be enough for a rate cut. Now, in our opinion, we have almost a 0% chance of getting a rate cut in the next meeting, probably even until June, when the matrix of who's on the committee changes just a little bit more. Next week, or this week, I'm sorry, we're going to see the ADP employment data, a weekly number, Case Shiller, home appreciation, HFHA, home appreciation, mortgage application, jobless reports, and Friday producer price index. Great news is we're seeing the 10-year yield drop to 4.03, as we've seen the Dow drop over 700 points this morning. Still have a lot of activity going on in the Middle East through the very large military buildup that we've had over there. So we'll keep our eyes on that and update everybody. Give us a call, 616-293-2189. We'll help look to get you pre-approved, go over loan options, refinances, fantastic rates right now, may save you money. Give us a call, 616-293-2189. Scott Riley, the Market Update Desk, your singular original market news source for West Michigan.